Okay, are we all ready to kick off?
Yeah.
Cool. All right, everyone, thank you very much for joining us this morning. My name is Stephen Kinsella from the University of Limerick, but these COVID crisis conferences are, they're starting to become a bit of a staple, and each time we do these conferences, we always bring together policymakers, academics, activists, and most importantly, people with the lived experience of what it's like to actually go through COVID. This is a subject that's really dear to my heart. It's something I've been writing about pretty much weekly with the currency.news, and the idea is SMEs and our private sector recovery from the crisis. So we have three excellent speakers today. We have Johnathan Ruane, who's a lecturer in global economics at MIT Sloan School of Management. We have Rena Maycock, who is CEO and founder of Cilter child protection software, but has a vast experience in the startup world. And we have Liz McCarthy, who is the head of Scale Ireland, which is a group that is there to represent Indigenous SMEs and particularly really high-flying innovative companies. So the format is of these talks is as before. We will have each speaker speak for 15 minutes. They might have slides, they might not. And then at the end, we will have a question and answer session. So if you have any questions for our panelists, use the Q&A button at the bottom, and I'll remind you to use that after each speaker finishes. So Rena, are you ready to give us your remarks?
I am indeed. Thank you very much, Stephen. Thank you everyone for your time this morning, and welcome. I'll give you a bit of an introduction to me. I have a bit of a checkered past. My background is in media. I used to run radio stations, and then about 10 years ago set up a retail business, a matchmaking agency with my husband, which is going strong. It's based on Grafton Street there, which is a retail business. And then about 3 years ago, I founded Cilter child protection software. So I'm in the tech space now and still in early stage. So I suppose I come to this. I also write for the Currency along with Stephen. I'm heavily involved in IBEC, particularly Technology Ireland and the CEO forum there. So I guess I have two unique insights into the COVID subsidies and supports that are available to businesses, because I have two hats. So, you know, I'll speak about them separately. Intro Matchmaking, which is our retail business, you know, we have found that the government supports and reaction to this crisis have saved our business. If it weren't for the COVID wage subsidy, you know, we would certainly have been in crisis mode and had to lay people off fairly quickly. So the wage subsidy has helped us keep everybody fully gainfully employed. It took the pressure off us, particularly the abeyance of the VAT and PAYE payments. From a cash flow perspective, were very, very welcomed, because it gave us that breathing space that as business people we needed to be able to regroup, to pivot, and to make the changes that we needed so that we could continue trading. And that's one thing that's often not really discussed, is that stress that business people can be under, particularly in crises like this. So the government supports we found have been absolutely phenomenal. And in actual fact, in that business, we have now found ourselves having the opportunity to scale the business abroad and franchise it. So, you know, we through Leo have applied for a business expansion grant, which will help us fund the costs of putting a franchise model together. And we found, you know, we set this business up in the last recession, and it was perfect fertile conditions, because you get advertising is at rock bottom levels in terms of price, you get cheaper rents, you have lower wages, and it's because it's a service-based business, you know, it's low capex, so it's perfect conditions in a recession. So we're seeing the opportunity there, and the supports there from government have been absolutely fantastic. But then when you look over the other side on our child protection software, you know, we're an early stage tech startup, we're pre-revenue and we're pre-seed. You know, we have spent quite a bit of money of our own on this, but we've bootstrapped effectively all the way along for the last 2 years. You know, all in attempts to make sure that we get all of the assets that are necessary to make it a really good investable opportunity for investors. But, you know, it's one of the, to give you a bit of perspective, we're not just people, a bunch of, you know, people with an idea and a good pitch deck. We've quite a lot of assets. You know, we have a patented data content filter, we've got UNESCO endorsement, we've got a string of academic supports. We have Vodafone on board to help to partner with us on our pilot. We've got the Irish government on board to help to partner on our pilot. We have a prototype, and we've been awarded the H2020 Seal of Excellence 3 times. So, and we've got a team of 9 people all working for free. So for 2 years, this has been the stage for us. And about 12 months ago, someone in PwC saw the video of our prototype on my LinkedIn page and contacted us and said, are you looking for financing? And we said, yes, why? And they said, well, you know, we might be able to help you. So we engaged them on a success fee basis to help us find seed funding. And we have found it to be, you know, practically impossible. Principally because in Ireland, there seems to be a little bit of a lack of knowledge on how much money it takes to develop a truly deep tech solution. Ours requires quite a bit of R&D. It's got a 2-year lead time to market. And in the States, you'll find VCs have a very good understanding of the type of money that it takes to bring a deep tech solution to market. But in Ireland, they don't. And, you know, in the last year, having engaged PwC and ourselves banging on doors looking for financing, we have only managed to secure meetings with 3 venture capital firms. Everybody else said, you're too early, you're too high risk, and basically the lead time to market is too long. So there's an appetite out there for supporting businesses or innovation that doesn't take very much money to get to market, but a deep tech solution, a really good deep tech solution, takes quite a bit of investment in R&D. So, you know, for the type of businesses, as Ireland, if we want to be creating the type of innovative technology companies that we want to become unicorns and be market leaders, then we need to invest in them. But we have found that there is precious little in terms of options for seed funding in Ireland. And I spoke to a venture capitalist yesterday who confirmed it for me, and he said, VCs don't want to hear that you need money to build your product. They want to hear you need money to sell your product. But, you know, and Enterprise Ireland are very well aware of this problem. And the lack of seed funding that's available in Ireland for companies like ours is not a new phenomenon. It's not a COVID phenomenon. It was already there. And I had meetings with management in Enterprise Ireland in December and again in January discussing exactly this. An action plan was in place, but all has gone quiet. And as recently as a month, maybe 2 months ago, I spoke with a company that was tasked with spending Enterprise Ireland funds on, and it was a specific seed stage fund. And I was told they couldn't invest in us because we didn't have a product at market, we didn't have revenue generating. And anybody that knows anything about technology startups knows that the deep tech, really innovative, disruptive technology that's capable of disrupting a global market couldn't possibly have a product in the market before raising a seed round because they need investment to build it. So this is the issue that we have been finding. And this COVID crisis has turned a bad situation into a worse one. And the worry is that seed stage companies, genuine seed stage companies like ours, will fall through the cracks unless government does something. And radical changes are needed. And I know the worry is that you'll all have been seeing articles all over the place confirming that venture capital firms all over the world have pulled up their drawbridges because they need to, and I understand this, they need to support their existing portfolio of companies. But there's a real risk that Enterprise Ireland will do exactly the same thing. And then where does that leave seed stage companies? And there is that real risk that an entire generation of truly innovative Irish startups will be lost because we are underrepresented, and it's important that we have a voice. And I guess that's the reason why I'm speaking with you guys today. So I called for a number of changes. I wrote an article there for the Currency this week and called for a couple of radical changes that I feel could really help make sure that we have a strong Indigenous tech sector in 5 years' time. One is major changes to the EIS tax system. There were changes there back in October that made it a little bit more attractive. You know, the minimum investment went from 150 to 250. you can now reclaim your tax relief within 1 year instead of the staggered 4-year kind of drip feed system that had been there beforehand. But really, it didn't make any meaningful change to the EIS scheme. So I know from, we were pretty close to securing money from a private high net worth individual and an impact fund just before all this crisis hit. And things went cold because understandably, he said, look, we need to see where our portfolio lands to see if we have any money to invest on the other side of all this. And I know from speaking to people in the markets that, there hasn't been the widespread devastation of portfolios that investors had feared. And things have kind of leveled out. Obviously, they're lower than they were a month, 2-3 months ago, but nobody has had a, severe devastation. So there will still be money there to spend. And it's important that the conditions are created to make sure that private investors feel that it's safe to do so, or make it such a no-brainer for them to bring their money out of retirement in, money that's sitting in banks gathering dust. It's certainly not gathering any serious interest. Make it worth their while to come out and invest in early stage tech companies that and create, somewhat of a culture of private high net worth individuals investing and supporting in indigenous tech. So those changes that I suggested were that they raise, the tax relief from 40% to 85%. I didn't pick the 85% out of the air, but I know that, ultimately the government would say that that's them ultimately funding that investment in part. But it is very important that they massage that money back into the economy and make it, put it to work for everybody. And they'll get an awful lot of it back in PAYE and etc. The other thing is that they raised the minimum to $1 million, and the other one was that they include inheritance tax write-off. So very similar to the SEIS scheme in the UK, which is very attractive to pension funds and older people. If you leave your money in the investment for 2 years, then you get to write off the full value of the shares against inheritance tax. So that would make it a no-brainer for anybody, that is retired and wants to make sure that their children are well looked after. And then the other thing is on state agency changes. I really think that, or development agency changes, I really feel that policies within Enterprise Ireland need to change. Something radical needs to be done to support seed stage companies. I know they are the biggest investor in the state, but there is also a policy of, giving over large tranches of investment money to third parties to manage and invest on the taxpayers' behalf. And quite often that money is invested to capitalize, it goes to capitalizing foreign companies. And I think that's fundamentally wrong. I know, it might seem like Trump's America first, but I think at this stage, it's very, very important that steps are taken to make sure that companies like ours, don't fall, because otherwise they will. So I think that's all I have. If anybody has any questions, I think that the format is that we ask them at the end. But that's me.
Rena, thank you very much for that. That was I think one of the best things about this this set of talks is that we do get the experience at the coalface, if you like, and I think that this is one of the areas in which policy has been lacking up until now, and I'm really happy that you've identified these gaps, because I know these talks are watched by policymakers, so it's a very, very good thing that they're.
I hope I haven't made too many enemies, Stephen.
No. I think everybody's more than happy to listen to these points because they're very well made. Thank you very much. And again, for everyone watching, if you have questions that you'd like to ask any of the speakers, please put it in the Q&A box, and I'll have a read of them and then read them out later on. Thank you very much, Rena. Can we move on now to Liz McCarthy from Scale Ireland? Are you ready to give us your remarks, Liz? You're still muted, I think. Okay. I'll mute you.
All right, I'm back on.
You're back on.
Great. Thank you very much. Yeah, it's interesting to go after, again, the experience that Rena has had from both as a traditional SME, is how we describe it, and an innovation-driven enterprise. And in that space of startups, she described deep tech is different to other types of companies, different experiences, different funding needs. And that's something we've been engaging with. So for the next 10 minutes or so, I'm going to just talk about, first of all, for anyone who hasn't been following the work that we've been doing at Scale Ireland and isn't deeply involved in this space of startup policy, and talk about how SMEs are different to how we describe them as innovation-driven enterprise. We've actually taken a term coined by MIT. Johnathan Ruane will dig into that later in the next session, and talk about how they're different, and how, because of that difference, government needs very specific policies that caters for that different type of company. I'm going to talk about the reaction to COVID internationally, so the kind of responses that we've seen in Europe, and a little bit about abroad. And then we're going to zoom into what the experience that we've been seeing here on the ground in Ireland. Again, some of those responses that were made that were more general business supports, and then the specific supports brought in for these types of companies. I'm going to talk about the types of issues that we're seeing in the background that are maybe impacting on decisions or the flow of money through to companies. Things like EU state aid rules, for example, or processes, or like Rena said, the EIIS, the availability of private matching funding is a critical part of the picture for government. So to start, in terms of the policy for IDE, so SMEs, as we first started our work at Scale Ireland, we realised that, as Rena had said, we needed a kind of coherent voice for this disparate group of companies to engage with government, to really advocate for very big policy change, not just at the agency level, but at the political level, and the variety of things, be it tax or otherwise. So as we started out, as we talked about startups, we felt that there was lots of different misunderstandings or various interpretation of what a startup is. Sometimes some people in government might view a startup as a new business. So one of the success rates for business policy is the startup rate, which is just the amount of new businesses. And so that was causing a bit of confusion as to whether a startup is just a new fledgling business, or is it a specific type of company. And that's how we evolved to using this term of an innovation-driven enterprise. So essentially, it's a company that has a very strong focus on innovation at its core. And typically, because it's innovating, it's investing heavily upfront in creating a new product, or maybe even a new market or a new business model. So that causes negative cash flow in the early days, hopefully leading to exponential growth or really high growth in the later stages. So for those reasons, those businesses need different types of access to finance. A bank wouldn't really be comfortable lending to those types of businesses because they're very risky. So that's why you need the full chain of different types of investments, seed right through to Series A or beyond, or bootstrapping, or there's various different ways that these companies can grow through that path. So that's just the first thing. And again, a lot of MIT has done a lot of good work on this, and a really good paper that I'm happy to share afterwards if you'll be doing a pack after this talk, about how it's that fundamental difference between the two. That's why you need the very specific policies in place. And that's what we're advocating for. I'm going to talk about just COVID very briefly. So as COVID hit, it hit all of us. It's like a tsunami, and we're gradually seeing the impact, and it'll continue to have an impact for many, many months ahead. So there's an immediate response, and then there's the sustaining, and then there's the growth response. So it's not over yet by any means, and it's still very valuable for us as a community of innovation, people passionate about innovation-driven enterprise, to continue to engage with government, but ideally do it in a coherent manner, with lots of different voices saying kind of subtly different things. It makes it harder to cut through, and for those policymakers who have a lot to deal with at one time, to really know what they should be focusing on. So that's how I would encourage people to engage with ourselves or other representative bodies. In terms of how other governments have responded, we would have seen, for example, in France and in Germany, and we also saw Austria and Luxembourg, they came out pretty rapidly with a very specific package of supports that was announced in a coherent manner for startups. And the kind of responses that were brought in were, for example, bridge financing opportunities, or access to loans in a very specific way that was fast-tracked to enable those innovation-driven enterprises to quickly move through the process of accessing liquidity. We would have seen in France that was maybe coming from a history of a lot of work that had been done over the last 10 years or so. They've had a startup policy minister in place. They've had a strong focus from a very high level on this specific cohort of companies. It's something we're looking for political leadership on in Ireland. And it isn't really there just yet. And that's critical because it's the politicians that drive the decision-making of the civil servants. So that's something that we really need to keep in mind. It's that political leadership that makes a big difference to the level of priority that's given to different types of businesses. I'm going to come down to Ireland in terms of what's happened. As it evolved, like I said, they brought in the wage subsidy scheme, as Rena referred to, which has been very helpful for a very big grouping of companies. However, for startups, there was huge fear and concern at the outset that they would be excluded, as has happened in many other cases. Because they're a distinct different type of a grouping, they're not eligible oftentimes for certain types of supports. At the very outset, there was an announcement that you needed to demonstrate a significant drop in revenue as a result of COVID. In our world, revenue is something that comes later oftentimes, and you're investing in growth and meeting different milestones. Now, at a civil service level, they announced it and said that they were intending not to exclude those companies, but nonetheless, it comes down to what's written in black and white and the terms and conditions and the specifics. That has a big impact. So we've heard from different companies that they've had to spend a lot of money on getting consultants to help them make sure that they are really eligible and utilising that support to the max. In many cases, companies haven't really got a lot of benefit from it. Oftentimes it's because the number of employees are usually above the 70k limit. So these companies are spending money on very highly competitive people, really high salaries. And so in that instance, that wage subsidy was really targeted more at the median of the kind of general SMEs and those types of salaries that needed to be covered. Other kind of supports that were brought in, people I'm sure on this will be aware of, things like back to business supports. They rolled out different supports that they'd had in place for Brexit that they kind of repackaged for COVID. A lot of access to vouchers, a lot of access to different coupons, different schemes. And a lot of them were particularly relevant or useful for maybe earlier stage companies where 5k was maybe more useful than maybe a bigger company that had a higher burn rate where they were experiencing a bigger drop in let's say revenue or a bigger impact on their business. So the experience has been mixed. I'll maybe refer to just two of our surveys. For example, engaging with startups throughout in our steering group. But we held two surveys where 360 people responded. And a lot of people said that they were going to run out of money if they didn't have access to liquidity from government. So that was obviously a very big need, was access to liquidity. The big response on the government side has been Enterprise Ireland, which is the agency that looks after these businesses. And there's the HPSU division, which looks after the smaller companies. And then they're also taking care of the bigger companies. And the Sustaining Enterprise Fund is the fund that we've been really lasering in on and trying to understand what was the process for accessing that. How could that be fast-tracked so that companies that are meeting very urgent needs for liquidity could access it sooner? In other countries, we've seen examples of companies receiving money in their bank account the next day. A lot of these stories in America, the PPP was brought out, huge benefits for companies that have operations in America, that they were able to access that at a very meaningful early impact on their business. And again, for business owners, certainty has a huge impact on decision making. And that early certainty of liquidity support and knowing it's going to come through has a big impact. Whereas in Ireland, we were finding that companies didn't really know where to go. They were struggling to access supports. And I think one of the issues is sometimes we're not clear on why something has been structured a certain way. So just to get very briefly into the kind of the nuts and bolts of the Sustaining Enterprise Fund, now this is more relevant to bigger companies, less relevant to Rena, which she's talking about those early seed stage kind of 2 to 3 size companies. The Sustaining Enterprise Fund was designed it's in line with EU state aid rules. So with EU state aid rules, you need to be able to demonstrate that as a company, you've exhausted other channels for accessing liquidity support before kind of leaning on this state aid. So for that reason, companies have been required to go through this SBCI working capital route, go to SBCI, engage with their pillar bank and get a rejection. And I think possibly that the fact that people didn't understand that that needed to happen and to get a rejection in order to be able to access state aid, that people felt disappointed and let down by the system because they felt that they were going on a useless kind of a fool's errand, as we've described it. But that's the rationale for that process being in place. It's a state aid guideline, and we'd be encouraging for that to maybe be relaxed or made more flexible to really understand the reality of what it means to be running a business and you know the extra cost each one of these steps involves. So I'm going to move over just to finish on the kind of big focus for us right now. So throughout, we have been engaging with government at all levels, Department of Finance, Department of Business, Enterprise Ireland, engaging with other representative bodies in as much as we can. And that's where having the voices of the likes of other entrepreneurs in the mix, it's really valuable. It just kind of shows the real human experience that backs up the data that we'd be gathering. So to date, a lot of engagement, some changes have been made, and again, just trying to raise this up on the policy priority list. Right now, the big focus is those liquidity supports, so digging into that Sustaining Enterprise Fund. Specifically, we're going to be engaging at an EU level to really get behind looking for this undertaking in distress definition to be changed. Again, it often gets down to definitions that have the big impact in practice. We're also engaging on liquidity supports, trying to figure out, are there companies that need a big quantum that's significantly more than 800K? If so, how can they best be met? Is it through existing channels, existing mechanisms, or do we need a new mechanism to be put in place? That's something we're working on actively. And then finally, a big focus, again, is reiterating what Rena had mentioned, is this EIIS. This investment scheme has been in place for a few years now. There have been a lot of problems with it for various reasons, from both an investor and an investee level. And we would be calling for a huge focus to be made on that. There are some minor changes would be bringing us in line with other countries, particularly the UK. We would believe that it'll have a negative, it won't have an impact in terms of exchequer costs. Ultimately, it's just encouraging private money to flow into these entrepreneurial indigenous tech sector, and that's taking off pressure off government money. So the business case is there, but we just really need to engage and make sure that priority is given to that, and that government policymakers and politicians understand that if these changes aren't made now, we really are in danger of losing this indigenous tech sector that we've taken years to build up. That's kind of a snapshot of some of our work. I hope that's helpful to inform the discussion.
That's very, very helpful, Liz. Thank you. It's really clear that you guys are doing a lot across a wide base in a very short space of time. Everyone is, but I was just struck by the last comment you made there about the loss of potential. And it's something I'm really alive to. It's something I'm very concerned about, that lots of really good ideas and really good people, they just don't see those ideas realized in an Irish context, which is obviously bad for growth in the medium and long term. We might get back to those. There's a couple of questions for you already, but we might get back to those in those points in the Q&A. And just again, a reminder, if you've got questions for any of our panelists, just click the Q&A button and type away. A really interesting piece of research just came across the lines that new job vacancies in the UK are at the lowest level since the 1940s. So just in terms of, sectors being shut down, no one's hiring anyone. So the idea of creating a group and this is from the Roundtree Foundation. So the idea of creating a group of companies that obviously soak up some of that labor supply is a very, very good thing.
Yeah, and just Stephen, just on that again, I didn't get into the rationale too much of why to support these, and hopefully, I imagine a lot of people on this call are maybe we're preaching to the converted possibly, but I think that's where, you know, the SME sector is very important, but without having, you know, export oriented, high value, high skill jobs in the mix, then you don't have the demand to support the local businesses. You know, there's a strong correlation there. And again, MIT research, they've shown that for every job, kind of a high skilled job in a startup, innovation driven enterprise, it actually supports 5 indirect jobs. So it's not choosing startups over SMEs. These innovation driven enterprises in the indigenous tech sector are a critical part of the overall economy.
Sorry, thank you very much, and we will certainly come back to this in the Q&A. I see Zoe has a question already, so we'll definitely come back to that. Johnathan, are you ready to give us your remarks?
I'm indeed. Can you hear me okay, Stephen?
Yep.
Okay, first of all, I'd like to thank Stephen and the Geary Institute and everybody on the call for inviting me along today. I've tuned into a number of these already and I found them really informative. So hopefully what I'm going to, I've got some slides I'm going to dial in. First of all, I have to go, will I make my screen shareable? As I'm doing this, let me say that I haven't been able to give proper credit to everybody whose work I am using, but I will be able to do that in the slides afterwards, in the slide deck that's sent around. Okay, so let me just see, is this presenting? Stephen, can you let me know, is this coming up okay on your side?
Can you slide down? We can see your PowerPoint. Can you slide through the deck?
I'm sliding there now. Is that working?
No.
Huh. Stop sharing Wetlog, go back down.
Maybe rather than going to presenter mode, if you just show the bare slides, I think that often works.
Yes, I get it. Okay, let me just do that then. Can you see that okay?
Yes.
Yeah.
Why don't I just go with this then? I'll just go with the bare slides. Great. Okay, so I want to talk about a couple of things. One is, can SMEs survive COVID? Like I said, I'm going to draw on a bunch of other people's work in this. I'm going to focus in on venture funding from an international perspective and where Ireland sits within that. And then I also want to spend a couple of minutes looking at 2 of my pet projects or pet topics, which is long-term investment in R&D, where Ireland sits and how should we think about this beyond just the immediate COVID emergency, and how exactly you think about policy innovation. So we're going to be covering quite a few different things, hopefully try to keep it focused on COVID as much as possible. First things, can SMEs survive COVID? So Liz and Rena have given an excellent insight into the practical needs of different types of businesses. As we know, SMEs is a large umbrella. But if we zoom back out a bit, I'm using some research here from the central bank. They came out recently, but looking at the entirety of the SME sector in Ireland, we know that there's about 79% of all SMEs are in highly or moderately affected sectors. So you're talking about 750,000 workers substantially affected by COVID right now. And the first thing that these companies need to be able to do to survive, to be able to add to the economy, to come out the other side of it and be, you know, delivering taxation for the state and employment for their workers, they've got to be able to stay in the game long enough. So liquidity is the #1 emergency. And it's not the only thing, but it's what we've got to focus on in the short term. So the amount of state support that Ireland has given, the first thing is, I suppose it's easy to quickly jump over, but it is actually phenomenal, the investment that we've made in essentially in staff salaries, maintaining the ability for people to stay in employment and then get paid by the state is a phenomenal investment. It was the right thing to do, and we should acknowledge it. And that's where the vast majority of the money has gone so far in the state outside of healthcare. But once that's taken care of, if you look at, for a typical SME, where are the other business costs that are going to come in? Well, they've got non-payroll costs, such as like heating bills. Some of them are gone down. If you're not heating your furniture store anymore, well, then those bills are going down. Some bills will be able to be postponed. So the government has announced stuff around taxation where you might be able to do that. But the remaining costs, and there will always be remaining costs, must be either funded by savings within the company or debt. And that really is what we're talking about when we're talking about the liquidity problem. So the scale of the problem in Ireland, if we make some basic assumptions around that, you know, only half of the non-payroll costs can be cut. And if we say that 60% of firms require finance from there, it comes to about a €3 billion liquidity gap over a 3-month period. Now, that's a very simplified number because for some firms, we know that the COVID shutdown will extend a lot more than 3 months. But to give you a perspective, is 3 billion for 3 months, 5 billion for 3 months, is this a lot of money? Well, to put this in perspective, the total amount of debt in Ireland amongst SME sector, I've stripped out people, groups like agriculture that aren't necessarily directly affected, and financial intermediaries. So amongst the core group that we're interested, core SMEs in Ireland, at the end of 2019, before COVID hit, the total amount of debt that these companies had was about 18 billion. So 5 billion is certainly an awful lot of money. So essentially the 18 billion that the total SME sector in Ireland has in debt, this is substantially reduced. It's, you know, it's less than half what it was 10 years ago. And so we've seen a long-term systematic reduction in debt amongst the small business sector in Ireland. So a lot of companies, like 60% of companies, have no debt at all, which is a good thing, you would say. Well, in general, it's not a bad thing in an economy. You know, it sounds like that we've got robustness and that we've got firms that will be able to weather some sort of liquidity problem. But it also means on the flip side that these businesses have no lending relationships. So they don't have a bank manager that they can call. They don't have some way to easily turn back on the tap of liquidity. And that certainly is an issue. So I would argue that certainly the 5 billion and that's a minimum, the 5 billion of liquidity that's already almost locked in, 5 billion of liquidity problem, I would argue it's definitely a big problem. And we're not going to be, and the traditional banks are just not going to be able to fund this. They have no appetite for doing that. Right now, they're going to be focused on ensuring that their existing loans are performing. And yeah, we can't, you know, banks are not going to be funding this. But as well as, you know, your traditional bank debt and not being able to fund this, another thing we haven't looked at, you know, when we look at the very basics of how a company operates around, well, it's got to be able to pay its wages, it's got to be able to pay its electricity and all that kind of stuff. One of the big elements I've left out of that analysis is trade credit. So this is, if I am a carpet company, I've got to be able to buy from my wholesaler, and my wholesaler's got to be able to buy from a European wholesaler, and then onwards from them to the manufacturer, etc. So trade credit is much more how Irish businesses operate. And so what we're seeing is for 75+% of Irish SMEs, they use trade credit as their primary financing source. This is much higher than European rates. And so even if we fund the employment, even if we give some grants to companies to keep the lights on, we're still going to have to make sure that the supply chains don't get completely clogged up. Because if I am a small business and I can't pay for my goods, and then that business can't pay for their goods, the whole thing starts to collapse. And in fact, even within that, some healthy businesses can become infected, if you like, through the transmission mechanisms. So I think this is a major area of concern. Looking at what the government has done so far, we've heard great insights from Rena and Liz already. The government did announce some measures, I think on the 2nd of May. To put this in context, there was about 6 billion announced. about 250 million of it is for grants for small businesses up to a 10,000 max. The rest of it really is about loans. So if I was to take a rough guess, and I've seen some other commentators make similar numbers, the actual cost of this, if you think about the government putting 6 odd billion into the economy, it's going to take several years, first of all, for that 6 billion to deploy, because many of the projects will be long term. But when we're finished with it all and we had to put a bill on it, it's probably going to cost about €1 billion. Okay, so that again, in the scale of what's gone of our economy, is not a lot of money, given that everything is happening. For perspective, you know, the bank bailout from 10 years ago cost us, when all was said and done, about 40 billion. So there's, you know, there's a difference between the money that you put into the system in the short term, as liquidity is important, but Ireland can afford more than 1 billion euros. And I don't think that this is the end of it. The reality in terms of the government interventions, it's probably a good thing to do, given where the state of the government is right now, to put something out there. Of course, I know business leaders are very keen to get the details of all these things, but the truth is that they need to form government rapidly to make this happen. So I think there's a big political imperative as well as the economic one. Mario Draghi was famous for, you know, with the ECB, when he came out and said, we will do whatever it takes to preserve the euro, and believe me, it will be enough. So, you know, at the monetary level, they come out and said, and this is an important statement during the last recession, at some point you have to come out and say, we will make this right. We will, you know, that's him using the monetary bazooka. We certainly have not used anything equivalent to a fiscal bazooka here in Ireland yet. That's not necessarily a bad thing, as long as we do lots more. So I think good start, but we have a lot more to do. There is one complicating factor. Well, so there are many complicating factors, but one I wanted to highlight is this idea that it's not straightforward as to which businesses should get which type of intervention. And policy design here will be very important. I can't state that as much. You know, it's not just scale, it's also the way you design the policy interventions right now. I'll skip over this because I want to talk about a couple of other things. Everything I've really talked about is about the short-term liquidity so far. But let's be honest, after you get over the initial hurdle of staying in business and keeping the lights on, that carpet shop I talked about, they're going to have to deal with the post-immediate crisis issue of demand in the economy. And it's very difficult to forecast right now. A small business owner I talked to during the week, this is a quote saying, liquidity keeps us in business until Christmas. The real test is how many shops will open again in January. And I think, you know, liquidity is the bit for the next few months, and then after that, demand amongst consumers. And the general economic stimulus will play a big role in that. Okay, so that's what I want to look at from an SME and liquidity point of view. I want to briefly touch on venture funding during this crisis, and then talk a little bit about the R&D side of things. So Ireland is not a big player in European venture capital for industry. Europe is not a big player in the global venture capital world. And we should, you know, it's good for us to kind of remember that in context. Ireland really is a very small player here. And if we expect to be able to produce world-class companies, we're going to have to reconsider what it is we do at a European level, but also at a national level. We are not at the same scale, but neither are we at the same ambition as the US and China. No European company established in the last 30 years has joined the ranks of the world's top 100 companies in terms of market cap. That's a phenomenal indictment on European innovation, because Europe is a highly innovative place. I could show lots more data to say that actually Europe does some fantastic research, we just are not commercializing it. And venture capital is not the only, but it's a big part in unlocking that opportunity. I think the speakers who have gone before me have dealt about this better than me, but let me just draw attention to venture capital is collapsing in Ireland. There was a survey done of Q1 2020 when obviously only about, you know, 1/3 of it was in the COVID period, but even still we're seeing the value of deals in the €1 to €5 million category fell by 44%. So venture capital is in a state of distress right now. I wanted to mention there are two types of entrepreneurs. One that comes out of actually up. You know what? Here's what I prefer to talk about, given the limited time. The difficulty in starting a business over the next, well, the immediate term and over the next 6 months and year or two isn't just about getting access to money, although those things are important, as we've already mentioned. The actual process of starting a business typically involves, almost always involves, an awful lot of external engagement. Getting out, talking to customers, testing your product, getting that feedback. One of the adages is about, you know, if you're starting a business and you've got any problem, get out of the building, go outside, talk to somebody, and that's how you're going to get the feedback from the market that will enable you to make decisions and move forward. In a COVID world, this is going to be extremely difficult. Trying to engage with customers you've never met for a product that you don't have, and maybe even a category that hasn't been invented yet, and trying to do all that over Zoom, that will not be easy. So as well as the financing, the actual process of business startup is going through a radical change, and it's a change that makes it more difficult. So finally, let me just go on to an area which is around, you know, R&D. So the bedrock of a lot of innovation comes from, at least at a policy level, how we look at research and development. And Ireland has not committed itself to R&D in the same way many other countries have. So if you look at the pre-crisis funding of R&D in Ireland in absolute terms, we still have not got back up to that amount. If you look at in almost every other category, almost every other government spending header, we have gone above pre-crisis levels of investments in everything from, you know, healthcare and housing and all the important things. In terms of R&D, we're still below it. So that means that our percentage of GNI star that we invest in R&D is substantially below its pre-crisis levels. It also means that in international context, Ireland is far below all of the nations that we aspire to in terms of delivery of social services. So you'll hear countries like Denmark talked about a lot when we aspire to better healthcare systems, etc. Those countries spend at least twice what Ireland does on R&D, and those two things are highly connected. And if, for me, I mean, just to put this in context, Liz talked about MIT, which I'm more familiar with on a day-to-day basis, but you know, the context here, Science Foundation Ireland, for example, has an annual budget of 188 million. That includes, by the way, research and all the administration. The university I work at MIT, the research only budget, stripping out all administration, is $2.9 billion a year. So we're talking about orders of magnitude bigger investment. MIT is not a large institution. It'll be smaller than any university in Ireland in terms of number of students. Obviously, it's got a big research focus, though. But years and years and decades of this level of commitment is what delivers enormous value for society. So if you look at the companies that have been spun out of MIT, their total number of employees, 4.6 million, with annual revenues of $2 trillion. So this is a transformative, you know, I don't expect Ireland's going to be able to get there overnight, especially given the fiscal restraints we have right now. But this is an enormous opportunity, I believe. And I think the wider policy question, outside of the day-to-day decision around, can I get funded on this? Can we fund this small initiative or whatever? But at some level, Ireland, and I'm not criticizing its institutions here, or government, I think they reflect what the citizens believe. Why do we as a nation not believe more strongly in the opportunity here? Why do we not back ourselves? Why do we not believe that investing in deep R&D today at significantly larger levels will lead to a better life for our citizens in the near term? And so, yeah, I wanted to talk about, maybe, you know what, why don't I leave this, Stephen, because I think I've run out of time on that one. So I might share those slides if anybody comes back into questions.
It's interesting. It's interesting. Thank you, Johnathan, because we actually have we have somebody asking in the questions, can you please share those slides? So that's helpful. There's lots and lots of things we could discuss in this, but let me start with Johnathan, and then I'll go backwards to everyone else. And again, if you've got questions for the panelists, just shoot an email, or shoot, not an email, that's not helpful. Ask in the Q&A box, and we will learn more. So this is from Aaron. So for Johnathan, with all this pressure on the existing business model of SMEs, how will they cope with additional health supports required for staff, testing and reducing underlying health risks? Does the government need to support SMEs here? Great question, Aaron. Thank you.
Yes, I think that's, I mean, one thing probably none of us mentioned, but hopefully is implicit in everything we're talking about. Any economic intervention should only be considered once the public health side of things has been addressed. And of course, those two things interplay, but public health is by far the most important priority. I mean, if you were to spend too long looking at economic data on anything, you probably, there's no point leaving the house because you'd get, you know, depressed looking at it all. And in particular, looking at SME type data, and in particular then looking at in the grips of this worst epidemic, recession, et cetera, et cetera. So why do we even bother? Well, actually, one thing that's just so difficult to see in any of this data, but I believe very strongly in, is the resilience and flexibility of individuals, of managers and workers at the level where they're trying to deliver for their customers. So I think that we need to support businesses to be able to deliver those, you know, I guess, interventions at the micro level. But I think that might be one of the areas that we need to trust them to figure that out themselves. I'm not so sure there's a place for government getting involved in, at some point, employers and workers and customers have to be reasonable with each other because you can't legislate for everything. And I think that Irish SMEs are very good at this. And you know, as long as people aren't abusing that, of course we should legislate for that. I think SMEs will do a great job.
Thank you. There's another question just directly for you from Ray Leiden from the Central Bank. Ray, thanks for being here. Question for Johnathan on grants. Any insights on how best to implement these policies? So how to avoid deadweight loss, bailing out shareholders and bondholders, or minimizing a tendency to build in future allocative inefficiencies?
And I've used a lot of central bank data there as well. So I don't know the individuals, but I'm sure some of the colleagues there. Yes, there are some, I put a big blanket point in there. I said, you know, the design of the policy is very important because this is very difficult to do. How do we ensure, for example, look, lots of businesses go out of business every year. Depends on which numbers you want to look at. You could say 20%, you could say more if you want. How do we ensure that what we're not doing is just supplementing businesses that were going to go out of business already? That's very difficult. Second of all, you look at stuff around how do we make sure that the state's investment is good for taxpayers? We do not want to be equity holders in small businesses for very long periods of time. My general belief here is that we do have to probably look at grants more than loans or equity for the smallest of businesses, and then the larger, you know, the further up you go the food chain, I think then it may be possible for us to do, you know, with ISIF being able to do loans. I think that's smart, but it's, you know, I don't have any simple answers, I'm afraid.
I don't think there are any simple answers. I think that's more of a problem. Can I ask the other panelists? We have some. Turn your videos back on. We have some very interesting questions. Maybe I'll actually ask everyone this question because it is fascinating. So maybe if I start with Rena and then go to Liz and then go Johnathan. This is from Anonymous. So far, there has been mostly a perception that the government has communicated well to the public in terms of what to do during COVID. Do the panelists feel communication and clarity to SMEs has been good? So maybe if I start with you, Rena.
No is the answer. I'm involved in IBEC, and through IBEC, that's where I get my education. They're the bridge now between the government, what's happening, and what we should be doing at SME level. And to give an example of that, you know, one of the questions from a participant was about leaving it up to SMEs, you know, the health aspect. And actually, the burden on SMEs is quite high. And if I weren't involved in IBEC, and an awful lot of small businesses and certainly startups aren't involved in IBEC because there's a subscription and all these costs mount up. You know, there's a return to work checklist. You have to nominate a COVID coordinator within your business. Now, I know an awful lot of small business owners that are not involved in IBEC and have had no opportunity to learn about those things. So in actual fact, I find the communication from the government to SME owners to be pretty bad. That's my experience. And then from the startup side, you know, I'm a HPSU client. We are with Enterprise Ireland, and it's very much you know, I'm pushing all the time, looking for those micro grants just to kind of make ends meet, that kind of thing. But ultimately, I'm kind of trying to drag information from Enterprise Ireland. So if you consider Enterprise Ireland as an extension of the government and the communication plan from them, then on both sides, both the retail side and the startup side, communication has been very poor.
That's really helpful feedback. Liz.
Apologies, I was on mute. Rena, I think we're going to have to talk after this webinar. Yeah, and this is where, again, you know, we said oftentimes a challenge has been that maybe startup owners aren't going to be very vocal about issues they're seeing because they don't want to be, you know, criticizing people who might ultimately be able to give them money. So that's a challenge, and I think that is changing. I think that there is greater receptivity to feedback. So I think that's something we're really encouraging is a feedback loop. You know, people are introducing things, mightn't get it wrong. We're all getting everything wrong, you know, as we move through because it's so busy. But it's a case of rectifying that and adapting. So I suppose, to be candid, yeah, no, I think the communication hasn't been what it could be. I think there's actually a lot being done behind the scenes that hasn't been communicated. I think that's one of the issues. It's not coherent. It's not for a lack of effort or for attention or for trying to figure out solutions, but that's just not communicating that out externally. So I think that could definitely do with really saying to businesses, as Johnathan said at the end of his last presentation, you know, it's just communicating, we're behind you, we're going to back you, we're going to protect you. That just makes people feel a bit safer, and that hasn't been there yet to date.
Okay, that's really, really helpful. And finally, Johnathan, how do you feel about the communication to SMEs over the?
Well, I'm in violent agreement with Rena and Liz that the communication is not there. But because I don't have anything to add to that point, I do think it is worth stepping one step back and say, why is the communication not so good? And from my point of view, it seems clear to me that it is because there's no stable government in place. The type of fiscal commitments that are needed are not palatable, I believe, to Irish citizens in a government that's in its current state. I think we were okay, obviously more than okay, with the necessary commitments on health. We were more than okay with the necessary commitments on funding wage supplements. We could do that with whatever type of government we have right now, caretaker or whatever the word is, right? But for us to go further than that, for us to intervene in the private sector in the way that's necessary, we don't have the platform. And I believe that's why they haven't communicated.
That is a very interesting point. On the government issue, actually not on the government issue, on the issue, Liz, with SME supports, what more could the government have done to support SMEs? This is from another anonymous attendee.
What more could the government have done? I think, again, this comes down to paying attention to this particular cohort in the early days when designing policies and designing responses. You know, in an ideal world, the wage subsidy scheme would have made it a lot easier in the early days for people, for that cohort of businesses, to be able to get some benefit from it. That would have been great, and it would have been very meaningful, because the cost of labor is the highest cost for these businesses. They're knowledge-based businesses. I think secondly is for sure around liquidity supports. I think I might cover off another question that had been there, which was around what have other jurisdictions done to support SMEs that could be worth looking at. So, for example, you know, we heard from businesses that have operations in Germany, for example. Very, very quickly, Germany, and again, I think to Jonathan's point, you know, the political landscape has a big impact on what a government can do. But unless what they did was they came in very quickly to recognize that businesses were facing challenges through no fault of their own. And they immediately responded with a very prompt liquidity injection of around 15K, which helped them just come through a very difficult period. There was no form filling. There was no please jump through hoops, please, you know, this elaborate process to be able to access support. And again, you know, something that we heard is that really helped with sentiment across the board. They felt that they were in a very different place. Whereas here, the feeling is they're not really behind us, and they're making us do work to get this support. And then around, another example is Luxembourg. You know, they in applying for funding there, it's a very simple, straightforward process. It's very streamlined. You apply and you say, this is who I am, and then the government, say, well, this is what will work for you. Whereas we're seeing it's the startups have to do that running. They have to go around and figure it out themselves. Whereas it seems that that's what's happening in Luxembourg.
Okay. I particularly like the German example, where you filled out a form online and they just transferred money into the accounts of the firms the next day. It was very interesting. Zoe asks, you mentioned the loss of potential in Ireland. This to me, I would argue this is a theme throughout every strata of our society. 70% illiterate people. It shows our education sector is losing potential as well. I'm going to be in violent agreement with you there, Zoe, but that's special pleading because I work in a university. So her question is all about libertarian paternalism, nudge theories, and so forth. I personally think that one of the ways to understand the crisis is in terms of its loss of potential. You know, if the economy kept growing like this, and we get a V-shaped recession versus a U-shaped recession, there's a massive cumulative economic damage. But from the perspective of the SMEs, and maybe this is a point we can pick up with Rena. From the perspective of the SMEs, SMEs with a really good idea, with a stack of technology sitting behind them, and they need the funding to get bigger, and they simply don't get it. Those ideas never become real. What's that like, and what's your experience of that kind of thing happening in the Irish or maybe the European context?
Yeah, I mean, it kind of feeds into what Johnathan was saying about the failure of Ireland, and that's Irish state and Irish investors to invest in R&D. We're an R&D rich company, and any innovative startup that has the potential to disrupt a market is going to have a substantial R&D bill. For my part, ever since the beginning, I've been directed towards H2020, which, for those that are familiar with it and have gone through the agony of a Horizon 2020 application, you know, the success rate used to be, I think at the start of last year, 2.4%, but because of the significant increase in interest in Horizon 2020 grant funding, it's gone to a statistical almost impossibility of less than 1% now. And generally, if you have a deep tech R&D solution, Ireland and Ireland's investors and VCs do abdicate responsibility for funding that R&D, and they abdicate it to Europe. But unfortunately, the European model isn't perfect. You know, for instance, 80% of the evaluators on the Horizon 2020 program are venture capitalists, which means that they're conflicted. So it's not really fit for purpose, and it's enormously competitive. So really, there isn't many places for companies like us to go. And Liz touched on it earlier on, and in that companies like ours fall through the cracks. You know, for instance, we can't access loans because we don't have any capital, we don't have any revenues to point to. We can't access wage subsidy scheme because we can't point to 25% losses in revenues. So, you know, really, you know, the COVID crisis, again, I've said it before, it's made a very bad situation worse. And I know of a number of startups that have failed to launch. You know, they've got micro grants, or they've gone and got the CSF fund, which is, you know, 50 grand, and they take 10% of your company. But ultimately, when it gets to the point where you need real meaningful investment, it just is not available here. And if you can't get over the line on H2020, then if you have a deep tech solution, then there's precious little you can do but move to the States. And if you look to the States for VCs, then they expect you to move lock, stock and barrel to the States because they want boots on the ground, not just a token sales office. They want you there. So, you know, for our part, we're a bit unique in that we're quite a mature bunch. We're not like 24-year-olds that can, you know, gleefully live out of the boot of our car. I'm 41 and I'm the baby. So, you know, we're all grown-ups. We want to stay here. 9 of us can't up sticks with all of our family. So in a way, we're kind of stuck. And that's why meaningful changes to how Enterprise Ireland treat real deep tech companies that need significant R&D investment needs to change.
That's really helpful. I do feel like those of us that have walked the Horizon 2020 road, we all need a kind of a support group, something like that, some kind of, you know, shared trauma experience. Yeah, because it's not fun. Maybe this was one for Rena and for Liz. If there was a new commission on taxation, actually, maybe Liz, you can start with this, and maybe Rena, you can go on it again. If there was a new commission on taxation, what would your priorities for be for SMEs and innovation?
Well, I can point you to our policy manifesto that we created ahead of the general election, and we were looking to have it as part of the programme for government, which is still a live agenda item, obviously, once we get a government formed. But the big thing right now, I would say, is EIS. You know, in terms of COVID response, that's where we want to put all our energy, is that.
Just for people who don't know, Liz, what's the EIS?
So that's the investment scheme. So it's the Employment Income and Investment Scheme, and it's essentially a way of incentivizing money into a way for supporting, I suppose, ultimately employment and also future growth. So what we have been looking for is that we tweaked, that it really incentivized money to go into very entrepreneurial ventures, as opposed to maybe asset-backed or less risky areas of investment. And what we would be looking for is for that to be really enhanced and easier to administer, but also the caps to be increased, etc. And that would have a big impact in terms of, like, there is money sitting bank accounts in Ireland, and there still is, and people are obviously going to hold on to that in a time of uncertainty. They're not getting a big return on that in terms of interest in their bank. And so the argument is just, let's try and incentivize that to come out into these, again, that potential that's there, those incredible businesses that are being formed. And in a time of crisis, that's where huge market opportunities start to grow. And so if we can start getting that private capital in, it can augment that capital, lack of capital issue. But I would like to mention just on that, you know, as we set out and kind of, let's say, scale Ireland from our perspective and how we grow the startup ecosystem, we do need to be cognizant that Ireland is a small country. You know, we saw with Johnathan's graph earlier, the size of Ireland relative to US or China or elsewhere. Realistically, companies, these startups are global first. They are naturally, you know, export oriented and looking at other markets. The reality is that Ireland is part of the picture. It's not the be all and the end all. You're going to have to access money from elsewhere because that's where the money is. And no, any amount of work that government does is not going to change that reality. And that's just something you have to accept as an entrepreneur. And that's where getting the seed capital right and enabling that money to flow in to foster those companies to a point where they can access money from abroad is critical. And that's just the reality. And I would say as well, we had seen pre-COVID that investors, let's say the West Coast of America, they are starting to invest in companies in Europe and they are not forcing them to set up their businesses on the West Coast because of the burn rate there. So that is a positive trend that we'd started seeing. We'll see how things pan out, you know, with COVID, but that is something just to keep in mind.
Okay, fascinating. One question for Johnathan now, and I guess I'll put two questions together. So one is about, can you say more about liquidity versus solvency supports? And the other one from Ray Leiden is, you know, can you give us a sense of, you know, how are we building up problems for the future? You know, some startups would never have happened, or what would have happened will now never happen. These kinds of ideas. So if you could speak to those 2 points, please, that'd be wonderful.
To answer the question with any kind of data around what are the problems that we're building up, because we'll never know the unborn businesses that were never started. And the reality of a lot of startups is it can be the winner take all market type dynamics, and a lot of digital businesses means that one or two very big winners can make a really big difference. Had Stripe been founded in Ireland and not San Francisco, and imagine it had continued the same trajectory, etc. I think its market cap today is about 10 times the entire Irish banking system put together. So having one or two that don't quite make it is very difficult to anticipate with any kind of data. It's my firm belief, though, that talking to to Rena and Liz, etc., that there is a possibility that we lose a generation of these startups. And so if they fail right now, that's one problem. They've taken many years to get started and get the cogs going. But then also that, you know, if we're not supporting the early seed ones over the next year, there'll be a whole bunch of people who would have been up for starting a business, but just didn't take the opportunity right now. And so I agree with Liz that the real focus there should be very much on seed. Ireland cannot fund a late stage investment in a $30 billion unicorn. We don't really need to do that. What we do need to do is put a lot more 1s and 2s and 5 millions out there, and understand that the vast majority of them are going to be written off. And we haven't made our peace as a state with that, I think. I don't know at what level we haven't made our peace with it. Is it, again, down to the citizens? Is it the institutions? But I'm pretty sure most startups know that that's the reality, because they're the ones that will be spending years of their lives working on this and will come out with nothing as well. But that's the cost of this game, and we're either, and slight divergent. I will come back to the question, but we're at a I think a crossroads right now as I'm going to say like an economic side of society. There's lots of other things going on in our society, but from an economics point of view, we've been one of the greatest economic miracles in the world for the last 30 years. Let's not forget that it was, 1990, the world's largest t-shirt manufacturing facility was in Ireland. That's 30 years ago. Today it's in Bangladesh. If you went to Bangladesh and asked them, would they be willing to take Ireland in 30 years? They wouldn't believe that it's even an option. So where we've come from has been phenomenal. It's been built on fantastic initiatives, both by our citizens and our leaders, the investment in education, the attraction of multinationals, a lot of other stuff that's gone on. But that alone will not take us up to the next rung. So if we want to Switzerland, if we want to Denmark, we now need to invest in R&D and supporting of businesses that are a lot more risky. And we're gonna lose some money, but this is what it's going to take to kind of level up. So that's maybe about what we're missing out. I think I've taken too much time on answering the questions. Stephen, what was the other one, or maybe you might want to question other people.
No, it was actually, this is sort of in the same vein from Zoe. So she's talking about nudge type policies about around businesses who need capital you know, for example, banks default offering an overdraft without you having to apply for it. It's just there and ready to go. These kind of intelligent, smart defaults. Is there a role for policy making in some of that? So, you know, constantly having to fill out millions of forms. It feels like a transaction cost that most seed businesses can't afford. So, is there a set of intelligent defaults we can find in this space?
And the behavioral stuff, I combine it with like an experimental mentality. Now is the time for us to try new public interventions, new ways of delivering support for people and businesses who need it. So I'm a big believer in, you know, bold, persistent experimentation, and in a crisis right now. So we don't have to, you know, put 5 billion into a proposal that the commentator made. Let's try a couple of 100 million. Let's try it into a targeted intervention, and let's see what happens with it. Let's review it quickly and let's move on. And so I think new ways, new types of thinking, new types of delivery, and the type of idea that was put forward is brilliant. I think to take advantage of some of the behavioral stuff, I'd be all on for it. But moderated, you know, and if it works, double down.
Really helpful. On the one for Rena, sorry to mention something else unpleasant, but how has the implications for Brexit for SMEs changed since COVID arrived?
To be honest, nobody's thinking about Brexit. Nobody that I'm talking to is talking about Brexit, because on one side, with my startup hat on, I'm dealing with startup founders, and they've got global enterprises with global ambitions. They're startups but have global ambitions. So really, Brexit isn't really on the horizon. It's not really a barrier for them for right now. Our business, our retail business, yeah, while we probably would have ideally gone and set up in London as our first franchise, we're avoiding the UK, but that's a strategic move on our part. But really, because our business at the moment is it's based in Ireland, it survives on Irish retail, Irish customers. It's not a big deal at all.
Okay, interesting.
Could I pick up on the taxation, the Commission for Taxation point, Stephen, just for a moment? One of those things that I recommended was, or one of the points about EIS, which Liz brought up, is that it's a startup is defined as any company up to 7 years old. Now, to give you an example of a company like that, a working group of funding consultants put together a lobbying document to lobby the European Commission to change things about Horizon 2020, because in January, for instance, they pointed to a French ICT company who had raised a Series A, Series B, and a Series C. They were successful in getting 15 million from Horizon 2020. Now, we could all argue, looking at that business, that it was far too big to fail. They had a string of investors that had supported that company. And if they were faced with financial ruin, those investors would have dig deeper and funded that company that final mile towards success. So there was that company did not need to take 15 million of high risk funding out of that program. So changes to the EIS that I would suggest need to be shortening that 7-year runway to 2 or 3 years. So you're funding genuinely high risk, because the EIS tax system was all about rewarding investors for taking risks on high risk investments. And a 7-year-old company that's revenue generating and has already raised a number of rounds before is not high risk.
Fair point. That's a very fair point. It's also a very actionable recommendation. And
just a stroke of a pen.
Yeah, I know our policymakers, they want things they can do, and so that is genuinely very helpful. We have other questions, but I want to be respectful of everyone's time, and in the last sort of 2 minutes, thank everybody who has joined online. Thank all the questioners. Nice easy questions for the for our panelists again, which is fantastic. I'm always impressed at the quality of the comments and questions that come in, so thank you all very much for that. Thanks very much to Mark and to Pat and of course to the entire Geary team for hosting all of this. internet technology is internet technology. I sound like I'm from the 90s, you know, in cyberspace. You know, no, it is a non-trivial exercise pulling all these things together, and so we genuinely appreciate the effort that they've made. And of course, finally, thank you to our panelists, to Johnathan, to Rena, and to Liz. This is an incredibly important area. It doesn't get much bigger than the innovative potential of the economy. And so I'm really glad that we had your time and expertise this morning on this. Yeah, just to say thank you very much for your remarks. A few people have been asking for Johnathan's slides, so I'll see if I can make them available through Eventbrite or some other channel. That's all from us. Thank you all very much, and have a great day. Cheers.
Thanks for the invite, Stephen. Have a good one.
Thank you, Stephen.